our financial performance over the fiscal year ended March 31st, 2012. As you would have seen from the results that have been just announced, that we had a net profit in this quarter of 271.8 crores, representing an overall increase of 33.6% compared to the corresponding quarter last year. Equally, for the full year, we had an overall increase of 34.4% with an aggregate net profit of 977 crores over the previous year, PAT of approximately 727 crores. Total assets went up to 73,600 crores, representing an overall increase of 24.8%, with capital adequacy rising to 17.9% compared to around 16.1% last year. Core Tier 1 capital is at 9.9% compared to the previous quarter. It has improved from 9.6%. I'm very pleased to advise you that based on the recommendation of the management team, the board has concurred for further approvals by the shareholders in July, a dividend of 40%, representing an increase of 60% of 25 rupees that we paid, 2.5 rupees that we paid last year. So there's an overall increase of 60% in the dividend, so it will be 4 rupees a share as of the shares outstanding on 31st of March. Further, net interest income for the quarter went up by 28.6%. Non-interest income has improved by 42.6%. Operating profit by 23.4%. And as I mentioned, the PAT increase is 33.6%. Similarly, for the year as a whole, net interest income has gone up by 29.6%. Non-interest income by 37.5%. Operating profit for the year as a whole has gone up by 39.4%, and profit after tax by 34.4% to 977 crores. This year has been, in a way, a year of consolidation, some de-risking and debulking of our balance sheet. So while our profits have increased quite significantly by over 34%, the total increase in the advances book is just about 10.5%. But if you add to that credit substitutes, which are also customer assets, in aggregate, the increase is 20.3% year on year, which are the risk assets, funded risk assets of the bank. The deposit growth is only 7% in totality, but the key highlight numbers is really the CASA improvement, which has been very dramatic, as CASA has improved year on year from a level of just over 10.3% to 15%. So this is the single biggest increase in CASA in the overall life cycle of Yes Bank since inception, having improved, as I mentioned, to a level of 15%. But within the CASA formation, the good news is that post-deregulation, our overall savings account balances, also led very ably by our leaders, Sonu Bhasin, Chitra and many others in this room as well. Savings accounts have increased year on year by 206.4% and almost 108% quarter on quarter. So compared to December 2011, March 2012, savings account balances have gone up by 108%. The overall growth in CASA year on year is 55.6%. And compared to the previous quarter, December 2011, CASA has improved by 25%. And as I mentioned, the overall CASA ratio stands at a far better 15%, which has been one of our key targets in version 2.0 of Yes Bank. Moving on, our overall shareholder funds have gone up by 23.3% compared to last year. And this quarter, we raised 830 crores of hybrid capital, perpetual debt of 150 crores, upper tier 2 of slightly over 380 crores from IFC Washington, which is a 15-year upper tier 2 transaction, and a very significant development in our overall financial structure. And about 300 crores of lower tier 2 capital from domestic investors, aggregating to slightly more than 830 crores of hybrid capital this particular quarter.
Right, that's Rana Kapoor. Stable, like we told you, net interest margins have been flat quarter on quarter at 2.8%. So they've pretty much maintained their net interest margins. Their CASA ratio has gone to 15%. And like you heard from the management, it's been a big bump up from last time. Many analysts, in fact, feel that the bank could improve the CASA to 18% by FY14 because of the savings rate deregulation, etc. And a couple of other internals like the gross NPAs that have moved just a tad bit higher. So little bit of pressure on that to 0.22% versus about 0.2%. Otherwise, the numbers look just fine.